The year is 2025. The U.S. Canada border, once a symbol of unity, is now a line in the sand. A trade war ignited by former President Trump's tariffs on Canadian auto imports rages. The consequences are far-reaching, reshaping the global landscape and testing the limits of a once unbreakable alliance. The first casualty, trust. The initial shockwaves were felt most acutely in Canada, particularly in the heart of its auto industry. The ramifications of Trump's decision were swift and brutal. The Windsor car assembly plant, a cornerstone of Canadian manufacturing, fell silent. Assembly lines, once humming with activity, ground to a halt. The human cost was staggering. 3,600 workers, many of whom had dedicated their lives to building cars, were suddenly jobless. Families struggled to make ends meet. The Canadian economy braced itself for impact. The trade war had begun. The closure of the Windsor plant was a stark illustration of the tariffs' immediate and devastating impact. The livelihoods of thousands of Canadians were hanging in the balance. The economic pain was real, and it was spreading. But Canada would not be bullied. Prime Minister Mark Carney, a seasoned economist known for his calm demeanor and decisive action, refused to let Canada become collateral damage in Trump's trade war. Canada responded with targeted tariffs of its own. The message was clear: Canada would not back down. Canada imposed a 25% tariff on U.S. cars that didn't comply with the USMCA. Furthermore, $30 billion worth of various U.S. goods were hit with retaliatory tariffs. Adding insult to injury, Canada targeted $12.6 billion in steel and aluminum imports, delivering a blow to the U.S. industrial heartland. Canada's retaliatory tariffs, effective March 4, 2025, were carefully calibrated to inflict maximum pain on the U.S. economy while minimizing harm to Canadian industries. However, the integrated nature of the North American auto industry meant that some pain was unavoidable. Canada deliberately spared auto parts from the tariffs, understanding that crippling this sector would hurt both countries. This strategic decision highlighted Canada's pragmatic approach: hurt where it matters, but avoid collapse. The impact on the U.S. economy was immediate. Commodity prices, already on the rise, surged even higher. Inflation, a sleeping giant, began to stir. U.S. industries, particularly auto manufacturing, faced soaring costs and crippling production delays. As the trade war intensified, the consequences reverberated throughout the U.S. economy. The stock market, a barometer of confidence, reacted with predictable anxiety. The Dow Jones Industrial Average plummeted 1,000 points as investors panicked. U.S. consumers felt the pinch as prices on everyday goods began to climb. Grocery stores raised prices on vegetables and beef, citing the tariffs' impact on transportation costs. Steel mills in Michigan, caught in the crossfire, saw the price of raw materials skyrocket by 22%. Perhaps the most dramatic impact was felt in the energy sector. Gas prices soared to over $5.25 a gallon in some areas, a stark reminder of America's dependence on foreign oil. The trade war had exposed a vulnerability in the heart of the U.S. economy. Section 5. Turning east. Canada, once a reliable supplier of 60% of U.S. crude oil, made a bold move. The country redirected over 11 million barrels of oil, a clear message that the days of energy dependence were over. New, long-term contracts were signed with China and India, eager to secure a stable supply of Canadian crude. This strategic pivot had a significant impact on the U.S. energy sector. U.S. refineries, many of which were designed to process heavier Canadian crude, struggled to adapt. Operating at a mere 71% capacity, the U.S. faced an energy crisis of its own making. Adding to the pressure, Canada's Trans Mountain Expansion project came online, allowing the country to export up to 890,000 barrels of oil per day without U.S. approval. This newfound energy independence gave Canada leverage it had never possessed before. Section 6. Domino Effect. The economic fallout from the trade war extended far beyond the auto and energy sectors. The ripples of uncertainty spread, impacting industries across the board. The interconnected nature of the global economy meant that no one was immune. Experts predicted a 0.8% decline in U.S. GDP for the second quarter of 2025, a chilling forecast that sent shockwaves through Wall Street. Some analysts went even further, suggesting that the tariffs could ultimately cost U.S. consumers and businesses a staggering $6 trillion. As the economic pain mounted, so too did the political pressure. Protests erupted in cities across the U.S., with people from all walks of life voicing their anger and frustration. The trade war, once a distant threat, had become a domestic crisis. Section 7. The world reacts. The trade war between the U.S. and Canada sent shockwaves around the world. Long-standing allies, stunned by the sudden fracturing of a once unbreakable bond, watched with a mixture of disbelief and concern. The global trading system, already fragile, teetered on the brink. Over 50 countries, sensing an opportunity amidst the chaos, reached out to the White House to initiate trade talks. Taiwan, eager to capitalize on the shifting geopolitical landscape, sought to discuss zero tariffs with the U.S. and explore increased investment opportunities. The European Union, caught between a desire to maintain transatlantic unity and the need to protect its own economic interests, struggled to formulate a coherent response. The trade war had exposed the cracks in the Western alliance, leaving many wondering if the damage could ever be repaired. Section 8. Shifting Sands. The U.S. Canada trade war marked a turning point in international relations. The old order, characterized by American hegemony and unquestioned alliances, was crumbling. In its place, a new, more fluid world order was emerging, one defined by shifting alliances and a rebalancing of global power. Canada, once content to play the role of junior partner, emerged from the trade war emboldened and independent. The country's strategic pivot towards Asia, coupled with its newfound energy independence, demonstrated a willingness to chart its own course on the world stage. The long-term consequences for the U.S.-Canada relationship remain to be seen. The trade war, a symptom of deeper geopolitical shifts, left an indelible mark on both countries. The road ahead is uncertain, but one thing is clear: the world has changed. The once unthinkable has happened, and the ramifications will be felt for generations to come.